we continue to wait for WeWorks prospectus for its IPO, which could come as early as this week. This would hold the full financial picture of the office-sharing startup for the first time. The company said in April it had filed paperwork for the initial public offering confidentially with the U.S. SEC. To discuss, we are joined by Phil Haslett, EquityZen co-founder in New York. EquityZen is an online marketplace for trading in pre-IPO employee shares from privately held companies. So, Phil, what are you going to be looking for when this crosses?
Sure. Hey, Emily, I'm going to be looking for two things. I think one is I'll be looking for the SoftBank ownership stake in the S1, because I think a lot of people are really curious of what SoftBank's ownership stake really looks like. And the second part I'm going to be looking at is non-GAAP financials, which is kind of a euphemism for fuzzy math that WeWork has tended to use to kind of describe its financial health. So those are going to be the two areas I'm going to be focusing on.
What kind of fuzzy math has been of concern when it comes to WeWork?
Sure. I think the one we've heard about a few times is community EBITDA, which is a relatively new idea that WeWork has used to kind of show what their unit economics are for each of the buildings that they run. But it doesn't take into account a lot of the costs and expenses that come with running a real estate company. So I think that's one example that investors are going to be focused on, because it's not really anything they can compare to another traditional technology company.
How popular have WeWork shares been on the secondary market?
It's really interesting you say that. So at EquityZen, we've worked with about 150 companies to date, and I can say that actually, despite the brand awareness for WeWork publicly, in the private markets, we've actually seen relatively tepid demand for the company, which may hint that the valuation for the company is a little bit higher than investors are looking for, and may not bode as well for the company as it becomes a public entity.
So how does it compare to other names that we might know?
Sure. So, we saw pretty active markets in companies like Spotify and Slack leading up to their IPOs, which kind of makes sense because both of them have pretty high awareness, even while they're private. And we would have expected to see something similar for WeWork, but it's been a little bit more tepid, as I mentioned, which is kind of interesting because the founder himself, Adam Neumann, has actually sold off, I think, something like $700 million worth of shares as a founder, which I think is going to be one question that he's going to have to answer over and over again at some of these investor days before the IPO.
How much concerns do you think there are about governance in general? Of course, it's been an issue with several, companies that have recently gone public about founder control, whether founders have taken money off the table before the IPO. But this one in particular definitely raises some eyebrows.
Yeah, if I had more than two eyebrows, I'd raise all of them. That's what's really happening here with WeWork. You've got an Up-C structure, which is basically an opportunity for the founders and some of the earlier investors to get a 7% haircut on their taxes, but it's pretty rare out there. That's actually going to prevent the company from being in the S&P 500 for years to come. You've got founders selling a lot of liquidity pre-IPO. You've got also a bit of a narrative change for the company between now and when it's and maybe 8 or 9 months ago. If you kind of recall back in December or January, the company was planning to raise something like $8 or $10 billion from SoftBank. That ended up becoming $1 billion from SoftBank. So I think that is also going to invite some more questions. But what we haven't seen yet, and what we'll look for in the S1, is if the company decides to have a very founder-heavy voting structure, something that we've seen in recent IPOs where the founders effectively kind of control the future of the company, while retail investors have, a piddling 1 vote per share compared to the founders.
There's also been a sort of change in the business model and the company experimenting with different lines of business that may not be as well understood as the core business.
That's right. That's right. I think two areas to focus on. One, WeWork has expanded from just catering smaller businesses and startups and moved up the chain more to enterprise offerings. So they've worked with companies like JP Morgan, Bank of America, larger kind of conglomerates, and building out more of an enterprise offering. The benefit to investors to see that is that they probably have locked them into longer term leases, and there's a little bit less variance there. The second part is also that the company has made, I think, 3 acquisitions in the past year or two, one as recently as last week, to kind of really bolster their technology offering. And one way I kind of think about WeWork as a technology company is trying to kind of solve the kind of the office admin function that you might have as a business, and to try to kind of take that away from you to save you a lot of money. And I think they're really focusing investors on that area, which they kind of have to, because right now, at a company valued at $47 billion and 26 times their last 12 months revenue, you better have a pretty darn good story on why you're being valued at such a large multiple relative to a lot of other real estate comps that historically trade somewhere between 0.5 to 1.5 times revenue instead.
Indeed. All right. Well, we're watching for that S1. We'll, of course, have all the headlines as that crosses. Phil Haslett, EquityZen co-founder. Thanks so much for sharing that insight there.